Gold bounces on more Chinese currency devaluations than metal, hitting a 3-week high on Wednesday. Are the charts signaling more upside potential? We have Gary Wagner joining us on Kitco's latest edition of Chart This. Gary, thanks so much for being with us.
My pleasure to be here as always.
So gold sees some momentum so far this week as analysts say the metal has regained its safe haven appeal. Is this just a dead-end rally, Gary, or could gold see continued strength?
Well, we could see, obviously, either of those outcomes. And the outcome that we will see, I believe, is heavily fixed on what the next move is by the Chinese government to fix their financial woes. In other words, what they have done by devaluing the yuan, and now for 2 days in a row up till Wednesday, has been an attempt to kind of mimic quantitative easing in the same way that the United States did, in the same way that Europe did. And whether it is a 2 and done or 1 and done, in other words, a couple of quick adjustments and their hands will go out of the till, so to speak, if that's the case, this could be a short-lived rally. However, if we see an extended intervention, let's say, by the bank in China, we could see an extended or prolonged rally in gold and U.S. debt instruments.
So, Gary, if other countries begin to devalue their currencies, some analysts say this should benefit gold. Is gold a good currency play right now?
Well, you know, gold has always been a benchmark in which we have kind of weighed other currencies. The key is this. If we do get, and I think we're far from that point, by the way, but if we do get an extended currency war, the beneficiary would be gold.
All right, let's look at silver now. The gold-silver ratio currently standing at around 72. Is silver undervalued at these levels?
You know, it's an interesting question that I'm still trying to pose an answer that makes sense. If you recall in the last show, we were looking for silver to roughly go to 1450. It hit that point and went below. It has not been acting in tandem with gold up until this recent week when we saw gold prices move up. The key is this. Silver has an industrial component that, quite frankly, gold does not. If we have continued pressure in the equities markets, we might see silver not fare as well as gold. However, if the equities markets recover and we continue to have rally in gold, then I think that silver would outperform gold in terms of percentage gains.
All right, Gary, getting back to gold on a shorter term basis, what key levels are you looking at?
Well, when we consider the move when gold was trading at 1230 down to the recent lows below 1080, we've got a pretty critical level at 1109. We're above that, and I believe that is support. In terms of resistance, short term, the next key level runs at around 1132.
All right, and longer term?
Longer term is quite interesting because if you take a look at the rally that we had from 700 all the way up to 1900, the 61% retracement level comes in at 1156. When we broke that, that's when gold turned extremely bearish and we were looking for numbers that were well below 1100. We would need to really see on a technical basis a closing price at or above that price point to really get bullish on the market longer term.
All right, Gary, thanks so much for joining us today.
My pleasure, and I do think that there is some excitement in the air. We are finally seeing gold begin to really rally to the upside, and I'm excited about what we'll see over the next month or so, at least through the summer end.
All right, you're excited, we're excited. Thanks so much, Gary, and thank you for watching. We'll see you tomorrow for a brand new Gold Report.